90+% of the traders, they always go against the trend.
What would you say would make a successful trader then, and what are the characteristics that you've seen from successful traders that trade with the trading pit?
Good traders are the ones that have discipline. Everybody's talking about the end of the bull market.
Yeah.
So Warren Buffett is sitting on 300 billion plus of cash. I think we are going to have a crash this autumn. What I've seen is that oftentimes, if you give a successful strategy to a trader, this trader will not be successful.
Hello everyone, and welcome back to the Trading Pit YouTube channel. I'm here with both Rutger and with Ilimar, and today we're going to have a very interesting discussion talking about markets in general, talking about prop firms and the potential opportunities for 2025. Obviously, until now, we've seen so much going on, from tariffs to much more things, and everything is going to be discussed today. So we're just going to start off with a quick introduction. Ilimar, thank you so much for taking the time to be here. I think everybody at home might be familiar with yourself, but if they're not, who are you and what do you do?
Thank you guys for actually being here. And I've been actually in the industry for a very, very long time. I started in 1997, where I don't know if you guys were born or
no, but one wasn't even born.
Okay, so I started in 97, and trading has always been my passion. So up until this day, I love the markets. I love the opportunities that the markets is creating, and throughout my career, everything has been connected and related to investing, trading, financial markets, etc. So I originally started in the private equity business. So I was working at a couple of US-based private equity firms. Then started actually a prop business together with my brother Ingmar. So we managed our funds and also third-party investor funds. And then 14 years ago, I started a brokerage company again with my brother, and which today is called Tickmill. We are, I would say, one of the top 20 largest FX brokers in the world. We have also futures, we have stocks, and this is kind of my core business, what I'm mostly known of. And then we have also the trading pit, which is somewhat like me going back to the origins, like the trading and prop trading specifically, trying to surround myself and trying to attract talent across the world, from Japan to the US, from Brazil to the UK. So
to the Netherlands even.
Even to the Netherlands.
Yeah. Yeah, I think that's a good time to like chip in and maybe also tell everybody at home like who we are as well. Obviously, this is an open conversation that we're going to have today. So on one side, we obviously have Ilimar from a very traditional background who's been in the space for extremely long, a lot more experience than obviously ourselves, maybe even more experience than us two combined.
I doubt.
But for everybody at home, like myself and Rutger, at least I can speak for myself, been trading since 2019, got in the space all thanks to crypto trading, I think, as most young guys probably got. At the time, for myself, the idea was actually, okay, the market can only go up until the dump back in, I think it was January 2017, when XRP went all the way back from 0.05 cents to $3.20 or so, $3.30, and then went all the way back down. And the rest is history. And at that point in time, I understood, okay, you can not only make money when the market goes up, but also when it can go down. And that's the point that I started to like really educate myself about the markets. And back in 2021, after around 2 years, started to become a little bit more consistent. And now what is it, 2025? So 4 years later, I'm grateful enough to be a consistent trader to a certain extent, obviously always, but blessed enough to be here today.
Yeah, thank you so much for having us. I got also into trading around 2020 when there was the major Corona crash, and I was like, okay, there are some interesting opportunities forming in the market now. And I was still a student, so I didn't have big funds myself. So then prop firms obviously came into the picture for me, because with a small amount of money you can trade big capital. So you can leverage your edge, because if you only start with like €1,000, then doubling your account, like gaining 1,000, will be hard, of course. So this definitely creates nice opportunities if you're starting out and you only have access to a small amount of capital.
I guess at that time, like 4 or 5 years ago, it was easier also like to choose a prop firm because there were less prop firms available. Now I think in every street you go, like there's one prop firm. You know?
Yeah, they're popping up like mushrooms nowadays, and obviously they're all coming at you with instant funding and the 60 or the 50% discounts, and it's kind of like gets you a little bit warm, right? Like obviously back in the days when I at least started trading for myself, it was okay, let me just deposit €1,000 onto a broker. And then start trading from there. And nowadays, it's like, okay, let me buy a challenge for €100 or for 500 or even €1,000, and let me start trading like that, because then I can start generating an income straight away. However, many people obviously don't understand that that's actually a bit more difficult, I think, than most assume. How do you experience that, and how do you see kind of like the space changing? Obviously, being involved with both a broker and a prop firm, do you see like a shift in, let's say beginner traders definitely kind of like taking the prop firm route as opposed to that broker route?
So actually, like when I entered the prop business, so we started 3 years ago with the trading pitch. So why I entered the space is I saw a lot of similarities with the brokerage business. So in the FX EFT brokerage space, like 15 years ago, you guys would be surprised, but the average spread on the euro dollar was 3 pips.
Oh, really?
Wow.
So that was like the best of the best service quality. So now you have average spread is like 0.1, etc. You know, and in terms of the prop as well. So I saw like similar like kind of setup like in the brokerage business 14, 15 years ago. So a lot of firms. Which have not clear rules. You are not sure about these firms whether they will be around also 6 months from now. You have not a lot of transparency who are behind these companies. The service quality is also questionable. You see a lot of the firms that are operating today, but they are not there tomorrow. So they are just disappearing overnight. So a space where a lot of traders are looking for transparency, trust, and security. And so in that sense, it's quite similar. And eventually, I think it will kind of transfer into like more consolidated, more robust, serious industry, which it is not today. And in terms of like traders specifically, so I think traders are still like the same, like whether you look at the brokerage part or the prop firm part. So a lot of traders think that they know it all.
Yeah.
They think that they can become successful very fast. They know that they are smarter than the market. Which means that they mostly trade against the trend. And also because they are super smart, they generally don't use stop losses. Because why they should use stop loss? Because Warren Buffett doesn't use stop loss. And so the traders are quite similar.
Okay.
But what I would say is that what has shifted is that so the beginning traders are more going towards the prop firms.
Yeah.
Because with less capital, you can get exposure much bigger than you get from the brokerage side. So I think that's the shift. And then a lot of the good traders who already start making money in the prop side, they deposit this money with the brokers and they continue trading with the brokers as well. So.
Okay.
So it's like two sides of the same like coin.
Yeah.
All markets related, and that's how.
And do you think it's a healthy shift that like prop firms are now getting more traction and that's where beginner traders are starting? Or would you say it's maybe at the same time a little bit unhealthy that traders are kind of like getting into that prop firm space straight away and focusing more on that fast capital? Do you think like there's a bigger drop off as well in traders that eventually will succeed? And because obviously trading like your own capital, I think there's more like, let's say, room to improve yourself because you're just trading on $1,000 or $100 account, and like you really take the time to kind of like, because it's your own money, to learn those steps. Whereas with a prop firm trading account, there's, I think, also a very different kind of emotion involved with trading. Obviously the numbers are certainly suddenly bigger and it feels more like an investment that you're gonna like lose completely Obviously, if you trade on, let's say, Euro USD with $1,000 account and you just trade, let's say, 0.01 lot, like you're never really going to lose all your money. Whereas with a prop firm account, I think everybody knows, like, okay, you get the prop firm account, you're going to start that challenge, and then you open a 6 lot short on Euro dollar, and then NFP comes, boom, and you get hit that daily drawdown. Like, obviously, let's say I think, yeah, it could cause a much bigger drop off for beginner traders and discourage them. Like, have you seen that at all? That like beginner traders like tend to stop faster?
I think like what I see and what is really like positive is that so historically, like when the prop firms were not there, so if a trader wanted to start trading, what did they do? Like they opened an account with a brokerage firm, and most cases they deposited all of the available funds that they had, So, and because they had no experience, the brokers as well, like on an account with any broker, you can pretty much do whatever you want.
Yeah.
Like you can put stop loss, you cannot put, you can do whatever you want. So they entered an environment whereas when you can do everything what you want, oftentimes you go crazy. Like and I think what is like really beneficial from the prop firm side, if you're talking about a good prop firm, is that a trader enters the account and it's a risk controlled environment. So from the very get go, the trader has to start thinking about the risk because they surely don't want to hit the limits that are placed by the prop firm.
Yeah.
So I think that's like really beneficial for the trader because it kind of embeds in their mindset that always thinking about the risk, always checking, okay, where the account can go if I don't want to get breached,
Yeah.
And then and since it's beginning, it's a beginning trader, the better it is.
Yeah.
Because it sets in his mind from the beginning. And in the contrary, in the past, like when somebody started with the brokerage firms, he didn't have any limits. He did whatever he wanted. So his mindset was already set in a way that
ready to gamble.
Who cares about stops?
I've seen it before, like NFP Friday, and then what they do is like Euro USD, and then they place like a buy stop and a sell stop, and then like 5 lots buy stop, 5 lots sell stop, and then they expect NFP to go in one direction. And obviously, what you see happening a lot of times is the manipulation wick, where you see boom, you get tagged into the buy stop, boom, you get tagged into the sell stop, and then it just starts consolidating again, and then eventually you lose both positions.
Yeah. I mean, we used to have like in the brokers business, for example, a lot of guys, especially from Asia, that before NFP, they deposited funds. One guy would open a huge position on buy, let's say euro dollar, and the other would open a huge position on sell on the euro dollar, and then later on, they were kind of transferring the money themselves. But I think. And the other good benefit about prop trading is that because your maximum risk is limited to the amount of money you pay for the challenge, it means that the guy, for example, who has 10,000 euros today, if he goes to like an FX or a derivatives broker in general, like with options, futures, etc., chances are very high that he will lose the money in quite short period of time.
Yeah.
Whereas if he goes to the prop firm, with 10,000, for example, even 5,000, you can buy a lot of challenges. Which means that the length that you are able to be in the machine is much longer.
Yeah, it gives you a lot longer learning curve.
Exactly, right? And which actually increases the probability of you eventually reaching success.
True. Other side of the coin then, because I thought at some point in time it could also discourage people, right? If you lose 5 challenges in a row that you think, okay, training's not for me, I'll just stop. But at the same time, indeed, like you're saying, it could also extend the lifetime and people might indeed spend more time on learning. I think that's interesting. So you mentioned previously, okay, like having a trustworthy, transparent and trusted prop firm is extremely important on one side. What makes a prop firm trustworthy, transparent, reliable? And why is the trading pit that as well?
I think it comes down from like the background of the people. So in general, like let's say, managing a broker today or a financial company, it requires a lot of like resources. It requires knowledge, experience, connections as well, to set up all the infrastructure, technology, etc. And how good prop firms stand out is that they are managed, they are owned, effectively operate by people who know what they are doing. So in our case, what we have is our core management team, including myself. So we come from the brokerage industry, so we've been there for decades, and we have built companies before. So it's not that we are 15 years old. We went to the potato market yesterday. Overheard somebody saying that prop business is like a great business. And then you go to some firms where you can, for $5,000, you can buy a setup for a prop firm.
Yeah, the white label.
A white label, and then you start. So I think this is like, so having people with experience, knowledge, and with sufficient financial resources is the core fundamental for being transparent, for being trustworthy, for being secure for the traders.
Yeah. 100%.
Because I think what a lot of traders, like, they don't understand is that when you go to a prop firm, it's not that you also like pay money for the challenges. You also expose your trading practices to them. So imagine if you're a really talented trader, and if you go to some prop firm which has been set up in Mozambique or North Korea or somewhere, how can you be so sure that they are not taking your strategies, or they are not reverse engineering, or in general your intellectual property is safe?
Yeah.
Because after all, a good trader, he possesses intellectual property, and that's value, how he trades.
True.
Yeah.
And I think that's like how we are different. So we come from the industry. We know what we are doing. We've done it before. We are all like transparent in that sense that if you come to our homepage, you see who we are. You have like LinkedIn profiles. You can see, okay, these are the people that I'm working with.
Yeah.
Whereas in like 99% with other prop firms, you go there, all the websites, they look the same. They all say that we are the top, we are the best, we are the leading prop firm, but you kind of ask, but like, who are the people behind the company?
Yeah.
We can't tell you because it's confidential and all of this. So you want my money, you want to access my strategies, but you are not willing to tell me like who are the guys behind the company.
Yeah.
Yeah. And often you don't really know. And what I also see is that there's like very little regulation around prop firms in most countries. And we've been funded before with like companies, the funded trader or my Forex funds. And then suddenly they start denying payouts. And then suddenly the website went offline and you lost all your money, all your accounts. And yeah, they're gone because there's no regulation and you're just there with empty hands. So
I think there are like two key risks involved in working with a prop firm as a trader.
Yeah.
So one risk is the regulatory risk. So in essence, today in the world, the business of prop trading, the way that it is done, it's not regulated.
Yeah.
It's not regulated in the US, in Japan, in Europe, nowhere. So, but eventually it will get regulated. I think within the next 1-2 years, we start seeing some things. The second risk element is the actual trading risk.
Yeah.
So imagine like we have thousands of traders who are trading on the market every day. The risk management needs to be at a very sophisticated level, because if it's not, then you end up losing the company.
Yeah.
So, or you end up not paying out to the traders that actually deserve to get the payout. So you have the reputational risk. Because what a lot of like firms are doing, this younger prop firms, is that if they have a very profitable trader, they just deny the payout.
Yeah, I've heard of this before, indeed. But okay, so now I think we definitely understand. Okay, what makes a profitable, what makes a successful prop firm? What would you say would make a successful trader then, and what are the characteristics that you've seen from successful traders that trade with a trading pay?
I would say that if somebody is an engineer, he already has like characteristic.
He has a big advantage in the market.
He has a big advantage. So I've seen that like good traders are the ones that have discipline.
Yeah, they think like an algorithm, right? Like they think very logically. Like
and they have like this structural, logical thinking about everything really. And so this is like one benefit. What I've also seen is that successful traders are mostly they focus on like some specific market. I've never seen like successful traders that trade like 5-6 markets at the same time. Like, so they trade options, they trade stocks, they trade futures, FX at the same time. It's not possible. So you have to focus on some area, and I think focus comes from your background. So let's say that if you're you mentioned that your dad is trading bonds, so you could actually be a good bond trader. Because when you enter that market, you have somebody to rely on,
and bounce the ideas off. It's definitely also what inspired me, at least, because I only trade the major dollar pairs, actually myself, and it's also where kind of like my interest came for only trading those pairs, because I understood at a very early stage, like, if I trade all those different pairs, like, it's impossible to kind of like stay up to date on all those different markets, or even up to date on all these individual currency pairs themselves, right? Like, for me, it's impossible to stay up to date. Okay, what is the Bank of Australia saying? What is the Bank of New Zealand saying? And then at the same time, what's the Fed going to do? What's the Euro going to do? So I just tend to purely focus on the dollar, obviously also because the dollar is the currency of the world. It makes the market go around, in my opinion. So it's easier to stay up to date, in my opinion, on just purely the major dollar pair. So even within just, let's say, a single, let's say a trading class, so only within FX, I again kind of like narrow it down just purely to the dollar, to keep it nice and easy for myself, because obviously trading itself is already hard enough. And then imagine, you shouldn't overcomplicate it for yourself, I think, in my opinion.
Plus I would like to add that, like, I think what, how good traders stand out is that they have also emotional stability. Like, yesterday we were having this dinner, and I was just like monitoring you as a psychologist. And you are like very stable, both of you very stable personalities. Like, you talk calmly, like, you don't have excesses in your the way that you talk. So a lot of good traders, they have this ultimate emotional stability. Like, and I can spot it, like, in traders as well. But what they also have is that a lot of good traders, they embrace the trend. They don't trade against the trend. Which is not true for like 90+% of the traders. They always go against the trend. Like,
and how do you identify those trends then? I think that's a good point to raise as well.
That's a good point. Yes. So, but in general, like, they embrace the trend. Like, and also, like, we have a lot of like these momentum traders as well, that they just check the momentum. Where is the momentum headed intraday, for example? And they jump on the wagon. Most, if not all of the good traders, obviously they limit their losses. And this is not the case for unsuccessful traders.
And identifying those trends, then are you referring to like the technical perspective, so looking at a market structure, or are you more referring to when it comes to a trend? Technical trend. So not necessarily like a fundamental trend where, for example, now in current markets, obviously with the tariffs being like talk of the town, like the current trend is obviously into a risk off sentiment where we have a strong Japanese yen, a strong Swiss franc, gold obviously rallying for the past few months as well. Like, this is obviously also a trend that you can get on. Are you also seeing successful traders like hop on that trend, or is it just purely more like the technical based?
I think right now it's like, in that sense, we are living in a very interesting time, that because there is so much volatility, there are also so much opportunity.
The market conditions have really changed.
But this uncertainty, what has come forward with President Trump, it's also makes the thing difficult in that sense that. Like, let's say if you are a swing trader and you look also fundamentals, fundamentals can be tomorrow different than they were yesterday. Like, even if you look at the tariffs, for example, one week ago, nobody expected.
No, not even myself. Like last week Wednesday, we were talking about this last night as well. Last week Wednesday, I was watching the news and I was risk on, so Australian dollar, New Zealand dollar long, and then at the beginning of the talk, he said, okay, guys, it's going to be a 10% baseline tariff. So the fundamentals were, boom, in line with the risk on. So Australian dollar, New Zealand dollar started pushing up higher. Swiss was weak, yen was weak. And then like literally 5 minutes later, he pulls out the board and he says, okay, tariff China. I don't know what it exactly stated. I think like 34, 64%. boom, even this island with penguins somewhere in the middle of nowhere was getting a 50% tariff slapped on them. So like in one instance, literally in the space of 5 minutes, the entire market went from risk on into being risk off. Stock started dumping as well. So indeed, like you're saying, like that's how fast the overall kind of like market sentiment, at the same time, the momentum and the trend can shift. So I think it's a hard time for both those intraday traders and for those swing traders. I think for intraday traders, maybe even harder with like the spikes yesterday as well. We obviously saw like a 90-day delay on tariffs being announced somewhere, and then literally again we were talking about it, like stocks made a rally back into the green, and then 5 minutes later somebody in the White House, I think, kind of like denied the 90-day delay, and then boom, we were back -2%. So if you trade that intraday, it's hard to make money because the market spikes up and down. If you're a swing trader, it's also kind of like hard to stay into the market because obviously you're going to be trading your stops to a certain extent. And then these kind of spikes can stop you out. So how are you seeing this within the prop firm, but also within the broker? Like, are you seeing any similarities on that side of thing? Are, let's say, traders who trade with prop firms trading differently to the traders who trade with a broker? Is there any difference there?
So what I see, like from the broker's perspective, is that because the moves are quite excessive, lately. So clients actually need more capital to weather the storm. So the clients are depositing a lot of money, and what I also see is that, and this is both on the prop and the brokerage side, is that the duration of the trades is shortening. Because not only the stop losses and the stop outs in general, because there are a lot of movements, but in general, I think people are afraid of making longer term bets. And
it's nearly impossible, right, in a market like this.
So if you look like, let's say, last 15 years, when the stock market has gone up pretty much non-stop, we had the COVID and some other events. But over the last 2 years, everybody's talking about the end of the bull market. So Warren Buffett is sitting on 300 billion plus of cash. So if you are really like long-term trend follower, let's say in stocks, the probabilities are against you right now. So at the same time, Europe is going to print 500 billion in Germany. So Trump is also a general pro business, pro markets. Like he's fixated on the market. So probably there is some boost that we could have still on the stock market, but how much, So
do you think it's a bubble that could be bursting anytime soon this year?
So I've said already like 3 years that I think the markets are overextended and they're overvalued. But what I kind of see is I see similarities with 2007, 2008. And so my own perspective right now on the stock markets is that probably after the last week and this week, this drop, we're gonna retrace up towards the end of May, because usually seasonally markets go up towards the end of May. Then we're gonna have a period of consolidation up until end of August, and I think, but that's not like a trading advice. I think we are gonna have a crash this autumn.
And what are the signs that you're looking for that market crash? Like, what similarities do you see with 2007, 2008 that make you think that crash could potentially be coming in?
So oftentimes, like when we saw the S&P 500 go to like 6,200, nobody really was able to explain why it was going up. Yesterday, for example, we were talking about the Spanish IBEX index here. So for the last 3 weeks, I was talking to local investors, traders, and asking why is the market going up. Nobody can tell why it's going up. And so there is a lot of so the moves that were there, nobody can explain them. At the same time, valuations are really high. You have Trump entering with tariffs, and also this geopolitical uncertainty around it, and what he's going to do with China. Is the Ukraine-Russian war going to end or not? The Middle East, this mess we have, internal mess in the US as well. Last weekend you had in every city big protest. People were coming out against the Trump policies. in general, there is like so much uncertainty on the markets, and stock markets don't like uncertainty.
No.
Plus, you have like some of the largest investors like Warren Buffett sitting on cash.
Yeah.
And
so these are things that you look at regularly.
Yeah.
Talking about the US, I also saw that I think it was around 14%, if I'm not mistaken, of the student loans are being unable to be paid back at the moment. They're not able. These old students are not able to pay off their debts. So I'm also seeing some issues there. Are you also looking at the housing market at all in the United States or globally? Like, you're not knocking door to door to see, like from the movie of The Big Short, obviously everybody's seen it, but you're not knocking on doors seeing, does anybody still live here?
What I know, for example, so we are in Madrid right now. So in Spain as well, the real estate market is quite stretched. So you have people not able to pay their rent.
The mortgage.
The issues with the mortgages. The prices on the housing is so high that a lot of people can't afford the housing, and it's across Europe and in the US as well.
Yeah.
So and this is also like coming back to the stock market. So it's like it seems so stretched already. Like you look at the housing market, the stock market, couple that with political uncertainty, still high interest rates. Still high inflationary pressures, tariffs, a possible trade war, like major trade war between US and China and Europe, geopolitical uncertainty.
So the end of the world is near.
So I think something will just crack this year.
And a positive scenario, is that also still possible? Like lowering the interest rates, like obviously we're expecting rate cuts in the United States to come very soon. Trump, maybe he is in fact maybe gonna like dim down on those tariffs a bit, and then could we still though see an all-time high on the stock market in your opinion? Maybe if these kind of like positive scenarios play out where tariffs are diminished, we see the interest rates come back down to, let's say in the United States 3%, 2%, maybe even lower than that. Like could that cause another boom in the stock market and then indeed see an all-time high?
What I was like expecting, a couple of weeks ago when they had this discussion about Ukraine and Russian war, that there was this momentum that the parties actually want to resolve that. I think if that war ends, and I think both sides are quite stretched already. So
both Ukraine and Russia.
Ukraine and Russia.
Yeah.
Then I think we might get like a very strong boost on the stock markets and other markets as well. Because if that war ends, it means that the Russian crude oil and energy products will flood the market.
Yeah.
And also I think the reconstruction efforts that they would have to do in Ukraine, that would bring a very strong boost to the European larger economies like Germany, France, UK, where a lot of like this machinery equipment that you need to reconstruct fully a country is produced. So that would give a boost to Europe.
So opportunities in the chaos.
Yeah.
So what are the big opportunities in your opinion then?
How do you trade them? Like how do you form a bias with all these things going on to form it into a trading idea? So
what I've discovered myself with lately is that I have very few positions. Like last year, I after 3 years of thinking that the stock market will finally crash, last year I sold all the stocks off. So I'm sitting on the cash mostly, and in some corporate bonds. And to be honest, I'm like expecting some sort of like clarity in terms of the, let's say, the tariff situation, this Ukrainian war, and what is going to happen in the US in general. This is what I'm expecting. Like tactically, when I look at the market, I think intraday there are some good opportunities on the stock market. Both on the buy and the sell side. If you look, for example, like Nvidia was yesterday trading at 85 or so.
I think it's down like 40% now.
Yeah, so there are some like very, very decent companies that have suddenly become quite attractive.
Do you think they're now undervalued, or do you think they're now at fair value maybe?
I think they're closer to fair value, but I think what usually happens on the markets is that when you have such a big drop, what we have had now, the market wants to retrace.
Yeah.
At least, this 66% or something like that. So I think S&P 500 wants to go back to this 5,800, 5,700, that level.
Yeah. Yeah, I was reading the biggest inflow of capital into the stock market since 2008. Yeah, since 2008 was somewhere last week, or it was this Monday. I think it was last week actually. So people do seem to be buying and be interested in getting back up again, and they definitely do believe in a rebound. But it's going to be dependent on many factors, obviously. Now, when it comes to, let's say, the FX market, what are the next big FX trends for the upcoming year, 2025? In your opinion? Like I see, for example, the dollar still heading down lower, surrounding the uncertainty that Trump brings to the market. I believe that euro dollar still in the short term has a lot more potential to push up higher. What's in your opinion kind of like the big next swings? Obviously, I know that you don't believe in the yen a lot.
So I think fundamentally, if I look at the dollar and euro, let's talk about dollar euro.
Yeah.
So I think fundamentally what Trump is doing on together with Elon.
Yeah.
To large extent in some areas, for example, they try to balance the budget. They try to cut out the excessive spending
with Doge.
So they try to deregulate the economy. They try to bring the oil prices down also through deregulation
and deregulation is obviously good for companies, right?
And they also now have a lot of these foreign countries and companies as well that have pledged trillions of dollars that they plan to invest in the US. Plus, US is a hub of AI. I think fundamentally, and the US, Americans in general, they are always the most dynamic in terms of coming out from crisis or uncertainty.
If you look at the history.
So I'm more positive about the US over the next 3-4 years.
Okay.
And in terms of Europe, I think euro dollar could actually go to 120, 125 if the Ukrainian war comes to a conclusion.
Okay. Yeah. Okay. Good.
So the day that
happens,
the war will end,
big spike.
That's the day I will start buying euro dollar.
Okay.
That's the day.
Maybe develop a new algorithm.
No financial advice. Because it's just this process is to reconstruct the country and it will drive the economy.
Yeah, 40 million inhabitants, right? In Ukraine, you were mentioning. So if all 40 million people need a new washing machine, Siemens stocks are going to go through the roof. I assume.
It's Siemens, Schneider, a lot of these appliances and
everything that is essential for a house, pretty much actually. Yeah.
So that's so I would buy euro
companies,
construction material companies. Hospitals have been bombed. A lot of hotels, energy infrastructure, pipelines, power stations.
Everything.
It's massive. It's massive, and but so other currencies. So I'm very fixated on the Japanese yen, and I am just trying to figure out how long are they going to extend this this craziness?
And for everybody, the craziness that you're referring to is then mainly the debt to GDP ratio that the Japanese government has a 264% debt to GDP ratio. So the debt of Japan is 264% of the total GDP, which is obviously to a certain extent unsustainable, or you would assume it to be unsustainable. Obviously, you're going to have very high interest payments on all of that debt. That's also one of the main reasons why the interest rates in Japan have been that low, right? But do you think it's sustainable to keep interest rates that low for such a long period of time? Do you think it's going to be fine? Obviously, now in Japan, inflation is starting to rise. I think a 3% inflation, rice prices are up 70% year on year. If you're not possible, or if it's not possible for a nation then to start, increasing those interest rates to cool down the economy, could this also cause the bubble to burst if the inflation just gets out of control? Or do you not really think it's possible for Japan to kind of achieve those similar inflation numbers that, for example, the US had back in 2022, 9% inflation, obviously you think it's not possible for Japan? Because if Japan has a 9% inflation and they're going to be forced to increase those interest rates, that could be maybe the burst of the bubble or not.
I think like the good things Japanese have is that they have like a lot of exports. So, but a lot of these exports goes to the US.
Yeah.
So with the tariffs, the Japanese companies will be incentivized to position their production facilities actually inside the US, which means the export revenues for Japan would drop. So they have less revenues and less tax income as well. So the government finances would be in a very difficult situation there. That being said, of course, like even though they have like high this debt GDP ratio, like majority of this debt is owned by the Japanese domestic institutions, pension funds, banks, and ordinary people.
Yeah.
And Japanese like not to spend, but they like to save. So
we were talking about this last night, right? Like back in I think it was COVID times. Like there was. In the United States, you obviously had those coupons, right? I think it was a $3 trillion or $4 trillion kind of like agreement that Biden signed at the time, giving everybody, I think it was $1,000 back in COVID to spend to stimulate the economy. And then in Japan, they did something similar. But where in the United States, everybody was spending it. In Japan, everybody was just saving it. So it didn't even have a good effect.
So I think like, how can inflation come there? So probably from external sources, because Japan buys a lot of products, so they import a lot of stuff. Most of the stuff they import. But at the same time, like in the US, Trump is intending to bring the prices down, especially energy, and through energy, all the other stuff will come down.
So for this year, like the yen is currently seen as a safe haven. We saw the yen pumping last week, and this might continue if the uncertainty stays, of course. But do you think we could see a shift later this year? When
I think like what could happen is that let's say if the stock markets are going to start to crash, then the Japanese who own a lot of foreign assets, they will start selling these assets. They will start bringing this money back, also to pay for the government debt. So I think Japan has enough resources to continue supporting the government spending.
Yeah.
And
but in terms of what it will do to the currency itself, like because obviously Japan won't necessarily or doesn't necessarily benefit from a very strong yen, traditionally speaking. It's one of the main reasons why dollar yen has been flying from, I think it was 83, 84 back in 2012, all the way to what is it now at, like 145 in 2025. So it's been like pumping for 100, more than 100% in, what is it, like just over 12, 13 years. So they don't necessarily benefit from that strong yen. But do you think like into 2025, like shorting the yen will be a good option again and going long on, for example, dollar yen, looking for longs on pound yen, euro yen?
I'm looking like mostly in pound yen.
Yeah.
And this 195.8 and this level, like I'm looking very like cautiously, because if you look at last week, pound yen touched twice that level. And this level has been over the last few years. It has held quite many times. So if on a monthly we are going to close above that level, I think I would become bullish on the pound yen.
Okay. Yeah, and it's a typical carry trade pair, of course.
Yeah. Interest rates in the United Kingdom are still relatively high, obviously. Okay, so
you have positive swaps as well.
Yeah. So the bias on the yen is clear. Bias on the dollar is clear. Now, what I'm interested to hear from yourself is what's the next kind of like, big things or the few big things for the trading pit, and where do you see the trading pit heading in towards 2025?
That's a good question. So what we're going to do actually over the couple of next weeks, so we are going to launch also stocks, so real cash equities. And the reason we wanted to move into stocks is that first of all, there are not a lot of prop firms that actually offer real stocks. And
that's a good selling point.
Yeah, but why we specifically want to go there is that because there are like hundreds times more stock traders in the world that there are like FX, CFD or futures traders, and because there is such a variety of opportunities to trade stocks, there are like thousands of different stocks, So we know that there is more talent in stocks than in FX, EFTs or in futures. Like just the number is so big. So we move there. We will add a couple of other platforms. We're also expanding into new markets. So this year we want to grow very actively, aggressively, even in the US and Canada, because that's the markets that we have not focused so much so far. So perhaps we can do something together as well, because you speak perfect English.
Yeah, definitely.
And this is something that we are doing. We also are going to make improvements on the dashboards and adding additional functionality there. And also what we are working right now is to use AI to help traders trade better. So what we want to offer is tools that are able to analyze the trading practices of the traders and then come back with advice as to what they can actually improve in their trading.
Interesting.
Because what we see is like a lot of traders actually have good setups, they have like good strategy, but they fail in some part, in most cases in the risk management. So this is something that we want to improve. And I think what is also very important, is we are working on getting licenses in different jurisdictions. So this year we will have definitely a broker's license as well. And under the broker's license, if the regulatory environment changes in Europe or elsewhere, so we can continue providing services across the board. And from there, from the brokers, our next step is then moving more towards the asset management, because we think that by the same time next year or 1.5 years from now, so we will have sufficient amount of traders, talented, successful traders
who are actually consistently profitable.
Who are consistently profitable, that we can invest safely our money. We have the track record by that time, and then we can start attracting also third-party capital.
So you see the prop firm kind of being as a, let's say, talent pool of traders where you're going to select the best traders from and eventually, fuel them into a fund and get them trading.
I think like few years from now, we would be the firm that is that sits on a couple of strong pillars. So one is the prop trading, the online prop trading that we do today. The next thing is probably a physical prop firm in that sense that we will have like few offices in like various places in the world where we actually bring the traders.
That's amazing.
Like offices. A trading floor.
Like a trading floor. So this is something. Then the asset management part, and probably like a brokerage like aspect as well to serve this whole setup.
I don't think this is something that any prop firm out there really has yet, like physical locations where traders can actually meet up. Obviously there are some prop firms, I think now we're opening like one physical location where they're only going to have like profitable traders, but you see the trading pit opening up like multiple like trading floors around the world where traders who trade with the trading pit can gather around and like exchange knowledge and network with each other.
This is something that we eventually want to achieve. Yes, it's super costly, of course, because you have to have a physical location, you have to equip it, you have to have people there, and but I think this is the result we will have in a year or two.
Fantastic.
Wow.
And how would you describe your ideal prop firm trader who trades with the trading pit?
I think like a good trader is somewhat somebody that like acknowledges that it's actually like real money that eventually is being paid out, that it comes from somewhere, so that has this mentality that is acting responsibly. Like this is really like important, and who is consistent in what he's or she is doing. Who focuses on like limited number of asset classes and excels in these asset classes and is expert in these asset classes, and who brings strategies that are also scalable. Because a lot of the strategies are not scalable. Like if you do like let's say news trading or like scalping, high frequency momentum trading, like it's you can't scale it.
So like if once you get booked on big capital, then these trading practices wouldn't be possible.
So we really are interested in strategies that we can scale as well, because our ultimate goal is not to invest just our money, but also to bring other people's money to the platform.
Fantastic. And being the founder of a prop firm as well, what would be your number one most important, or what would be the most important trait that you would identify in a successful trader, or that you would like to see a successful trader have? Would it be, let's say, no emotions? What would that be? The most important personality trait of a successful trader, in your opinion?
The most important part in a trader is to have a systematic approach in terms of and structured approach in terms of the trading. And this is it is very clear. Like when I talk to the traders, and I ask, okay, what is your strategy? Explain to me the strategy. Do you know that 90% of the cases, the trader is not able to explain the strategy?
Really? That high?
Yeah.
Wow.
So, which means that he actually doesn't have a strategy. So, usually the discussion is this: that okay, I trade the news, and I follow this euro dollar, and I have this couple of indicators. But when you actually ask, okay, explain me in 2 minutes your strategy. I don't want to steal your strategy. I don't need it, but explain to me what it is. And they are not able to explain when they enter, why they enter, where they exit, why they exit, what's the size, all this really the basic parameters of trading. They're not able to explain it.
Yeah, I've never really understood people who say, or when people think oh, I'm afraid that somebody's going to steal my strategy, right? Because I'm not sure if you agree with me, but at the end of the day, every single trader, obviously, if you trade with emotions, from an EA perspective, I understand if you're afraid that somebody's to steal your strategy. But if you trade manually, in my opinion, it's impossible to steal somebody's strategy, because every single person is wired differently, makes different decisions, has a different emotional capacity. I think it's impossible, right?
Yeah. I think I completely agree. So if there is an algorithm that is successful, left and right,
obviously lock your doors, lock your house,
lock your house. But in general, and I've talked to other successful traders as well, is that they think that there is sufficient space in the markets for everybody to trade, and they actually what I've noticed is successful traders in a lot of cases they mentoring other traders, because they have gone through the road, whereas they started from zero, had all these difficulties, eventually reached the success, and they want to give back to the beginners today, so that they can maybe get to the success faster than they were getting.
Definitely, well said.
And also what is interesting is that what I've seen is that oftentimes if you give a successful strategy to a trader, this trader will not be successful.
Yeah.
Because again, because he doesn't have any systematic structured approach, he actually starts diverting from successful strategy and starts doing his own mumbo jumbo stuff.
I think this is as well, if I can speak for ourselves at least, is what made the biggest difference in our entire manual trading career, is the moment that we understood, in order to enter the market, you need a systematic approach, like a mechanical edge. Obviously, when it comes to manual trading, there are so many different subjective factors. Like ourselves, we trade market structure. So we look, okay, are we in an uptrend or a downtrend? Then we look at Fibonacci. So are we in premium or are we in discount? Then we look at a supply or demand zone, which is, again, pretty mechanically to define, because we look at just a very simple sell before buy, or we look at imbalance candles. And then we identify liquidity, which are very simply said, just swing points within the market. But then what a lot of traders do is they see price come into their POI. And then at that point in time, they say, okay, we're getting to my POI. And now what? When can I press that buy button? Do I press when it comes into the zone? Do I press when it's at 0.5% of the zone? Do I press when it comes to the bottom of the zone? They don't have a plan. And at that point in time, they start stressing and they make those emotional decisions. Whereas the biggest transition for ourselves came when we had an actual plan. So when price comes into my POI, for example, I wait for the market structure to shift within that POI itself. Because for me, that is a mechanical way of defining that the demand zone plus the liquidity plus the discount, for example, when I want to go long, actually is working out. So that way I've defined an edge for myself to understand that POI is actually, let's say, valid. So I kind of become an algorithm myself. And I think this is very important for a lot of people.
So you just explained in 3 minutes your approach.
Yeah. But I still know people are going to use it differently.
but ask 100 people like on the street, like who are saying that they are traders. Ask the same question, you would understand that 90+% of the people are not able to explain what they are doing.
That's the difference.
And what's really the saddest part is that some of these guys have been on the markets for years.
Yeah.
And you ask a simple question, okay, what's your strategy? Please tell me. Like, don't tell all the specific, but just like a core concept of your strategy, and they are not able to explain it.
Yeah. For me, this is I cannot comprehend this. But I think one last closing message for the Trading Pit community. Anything you would like to say to them, being the founder of the Trading Pit?
Just thank you guys for coming here, and thank you for all the listeners. And I just want to say that this is like what you are seeing here is the essence of what we want to achieve here at the Trading Pit. So we want to bring like talented, successful traders from good academies to in front of our audiences, so that we can add value to our audiences. And this is exactly what's happening right now here. So thank you for being part of this.
Fantastic. Well said. Well, guys, thank you very much for watching another episode here on the Trading Pit YouTube channel. If you want to be here yourself speaking with one of us, make sure to apply through the Discord, or just leave a comment section or a comment in the comment section down below. Thank you for your support. Make sure to leave a comment and a like. I think another very valuable episode where you had the opportunity to look inside of the brain of a founder of a prop firm. I think something that is very unique within this space overall. Thank you for watching. Make sure to like and subscribe, and we'll see you in the next episode. Thanks, guys.
Thank you, guys.